Good morning, traders. It is Tuesday, July 23rd. Taking a look at the charts, we're going to look at the SP 500 here first, and more or less what we're looking at is simply where the market is in the grand scheme of things. Now, overall, we are in a strong uptrend. We've had this pullback, and the big question is where exactly is the market, and are we going to roll over and sell off in a big way, which feels like it's very frothy, could happen at any time, or are we going to continue to move higher? Now, if we take a look and zoom back on the charts, let's just go back in time here to the last cycle low, the last cluster we had down here where the market got oversold. All the cycles came in at the bottom, and we had this big move to the upside. And if we look at the price action, you can kind of get a feel for kind of just visual cycles. We've got a cycle here, we've got another cycle here, and we've got another cycle coming down. Overall, doesn't mean we're near the end yet. We still got a ways to go. And in terms of when we have this pink line rally, this is the start of a major significant multi-month trend to the upside. We get these significant pullbacks in the market. And really, after we have a nice impulse move to the upside, we're looking, these are the first opportunities you can kind of usually get in terms of swing trades. And the big question is, let me just clear the chart here. If we take a look where we're at, we've had an oversold territory. We got pretty close to another swing trade low over here, which is here and right over here. We're still holding up in an uptrend, and we've got to follow the trend. We are struggling with this 3,000 mark. It's been a struggle here for the index for a little while. It's a whole number. When you get to a whole number, there's a lot of big traders that say when it gets to 3,000, I'm going to sell. There's also another camp that says when it gets to 3,000, I'm going to sell short. So it creates all this overhead resistance. It's been struggling there, but overall, the markets are reloaded. They've had a pullback, and now they are primed and ready to break and run to the upside for another leg higher, something similar like this or this. And if they do break down from this level, we're going to get into a much more significant correction, something like we saw back over here in May. So that's kind of where we are. The key is with trading, you got to stick with the trend. The trend is still up, and really we still got to buy the dips going forward here. Now, if we take a look at the shorter term chart, if we look at the chart here, this is the SP 500 futures, the 30-minute chart, so only regular trading hours. And if we look at the price action here, you can see we've got some oversold territories. This is where we got long down here on SSO, had a really nice short covering and oversold bounce. I hate it when we get a big gap to the upside because big gaps tend to get filled, and we saw that fill. It came all the way back down to an oversold territory over the last session and a half. And today we're going to see a gap up to the upside here at the 3,000 mark. So I'm not a huge fan of gaps to the upside. When we're long, I love to see gaps to the downside because gaps to the downside get bought back up and then they end up taking off and going higher. So it is going to be a nice open today. We are gapping to the upside. We're gapping to this 3,000 resistance zone, which if you come right across the chart here, you can't see it actually, it's outside the window here, but there's a whole bunch of resistance through this area, this 3,000 mark. So I wouldn't be surprised if we see the market fade down a little bit. We did have a spike up to this level here, so the gap isn't huge in terms of yesterday's highs. We got this little gap. So we might only see a little fade back down to fill the gap from yesterday's high versus the close, which would be way down here. And then it could end up continuing to go higher over the next couple sessions. This pink line is our cycle analysis. It doesn't mean that's where price is going to go. It just means when the cycle analysis is pointing to the upside. So when it's on average angling up, we got to expect price is going to move higher. When it is angling down, all the blue lines here, the cycle analysis, usually it means we're going to have a downward bias. So we have an upward bias over the next 2 or 3 sessions, and hopefully we'll see the market push up to some new highs. You can see the daily chart here looks really good. Nice strong pop today, up 0.4%, and maybe we'll see it just take off to the upside, break to some new highs in the market, and we'll be off to the races with our first target on SSO, which is a 2 times leveraged ETF for the SP 500. Now, if we take a look over at gold, here is the gold chart. Gold struggling here. I'm not a huge fan of the recent price action with the big pop and reversal. It's still holding up, and I do fear it might pull back more, but there is a lot of momentum behind it. It's holding its ground. Overall, you can see our short-term cycle now as this shows probably going to see more sideways chop, maybe slightly downward move today. The dollar is having a strong pop here. Take a look at the US dollar index. This is the daily chart. And we've talked about this for a while here. It's got a nice rally, a nice bull flag, and today it's starting to break out, and we got that 98 target on the dollar. Obviously, the dollar is up really strong today, and more or less silver's still up 0.75%, and gold is flat. So definitely seeing money continue to flow into both the dollar and precious metals as kind of a safe haven play. And the dollar continues to work its way up to this area. Now, if the dollar gets up to 98, if it has a sharp pullback, I think that's going to be a launching point for precious metals going forward here. So we're going to keep our eye on that. Looking at gold again, looking at the daily chart today, gold, let me zoom in a little bit more. You can see we had a pullback today down to the 20-day moving average, which is this pink line here, right into the heart of this consolidation. It quickly rallied back up. And you can see how we've got this blue line in the sand. We drew months ago this line and how prices struggled to stay above it. Finally, we popped above it, had a big rally back up. Sellers came in, but we're still holding above this blue line. Today it dipped below the blue line and it's rallied back up. So this line that we drew months and months ago is pinpoint accuracy in terms of a significant pivot zone. And as long as we can hold this level and we're above this 5-day moving average, which means we are in a high momentum move, we could see gold potentially pop and really take off to the upside. And we've got a 3 times leverage gold ETF at this point. Gold hadn't broken out at the point when we got in. It was trading right up here at resistance. Well, the other metals and miners popped and took off, and I don't really want to chase something when they pop 10%, 8% really quick. Well, I'd rather get into gold that's primed and ready for that pop, and we can catch it. And using a 3 times leveraged gold fund, we can get quite a bit of action similar to performance-wise of the gold miners in general. So hopefully we'll see gold take off. We do want to get into silver and miners in the near future here, but again, the miners and silvers, if we were to pull up silver, here's the silver chart. Obviously, silver kind of gone parabolic and really popped to the upside. Don't really want to jump in after a lofty move like this. I'd like to, even if it goes higher, I'd rather pick it up on the first consolidation, because still at this point, what goes straight up can come straight back down, and we can get in down the road on a consolidation or a pullback versus chase it higher. Let's take a look over at energies real quick. Natural gas down 1/4. I'm not interested in natural gas at this point. Don't really see a pattern that I like there. Looking at crude, it's struggling, chopping around. It was in a downtrend, reversed, went into an uptrend, and then we had a little extra downside news that really put a lot of momentum in it, more or less flipped the trend to the downside the last couple trading sessions, and now it's forming a little bit of a bear flag. It's under a lot of key moving averages and under resistance, and we are now in net short position with an inverse ETF, a 2 times leveraged ETF, and we're looking for crude to move to the downside. Now if we take a look at the Fibonacci extension, we do move here to here and to this recent high, carry it forward. If we see crude continue to, move that bar, there we go. If we see crude continue to move down, then we are going to see a breakdown into this area and right down into the $50 per barrel mark, which happens to be a previous support level or that previous low in gold. This is the Fibonacci extension, very accurate in terms of momentum. And the way it works is, if we do get the breakdown and we get some type of hiccup at the 618 retracement, if we get a hiccup at that level, usually almost every time we see 100% target. 1 means 100% measured move, meaning this move here, you take that distance and more or less it carries it forward, and it'll bring us down to this area over here. So that's what we're looking for, and hoping we're going to start to see and we can profit from the falling crude oil price. Anyways, that's really about it. Let's pull up bonds actually real quick, take a look. Bonds are holding their ground. They're trying to turn into an uptrend here as a safe haven play. Money's slowly kind of rotating into bonds. And if we actually look at our trend analysis chart, we've gone from green bars, which means we're in an uptrend, to orange and red, meaning we're in a downtrend. And now it started to go orange there yesterday. And you can see here, it looks like short-term cycle analysis, the pink line here shows that we should see some type of potential pop today in bonds, but really it's kind of chattering all over the place. But I do feel as though bonds will eventually firm up and start to rally as the stock market gets closer and closer to a top. So it's already reversed. Money starting to rotate into bonds, but I think we need to see the equities market show some more signs that it's going to roll over, start to break down, and that's when we're going to start to see bonds take off and push up to some new highs. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.